Well, good afternoon, everyone. I'm Deborah Healy, Professor of Law at UNSW Law and Justice and Co-Director of New South Wales Law's Herbert Smith Freehills CIBEL Centre. I'm delighted to welcome you to the first panel of the CIBEL-SJTU Joint Workshop on Technology and Finance. I'd like to begin by acknowledging the traditional custodians of the lands on which we meet today. I will pay my respects to their elders, both past, present and emerging. First up, I'm going to introduce each panellist right before they speak, and the format this afternoon will be that panellists will each speak for between 10 and 15 minutes, and we will open up for questions at the end. So our panellists are ready. I will then introduce our next speaker, and our next speaker is Professor Heng Wong, Co-Director of the Herbert Smith Freehills CIBEL Centre in UNSW Law and Justice. And Heng is researches into the Belt and Road Initiative, China and economic deglobalisation, and central bank digital currency. He has been an Executive Council member of all three Chinese Societies of International Economic Law and is heavily involved in one global and two other Asian societies. He has spoken at WTO headquarters and leading institutions including Harvard, Oxford, NYU and LSE on issues relating to his research areas. And he has taught in Australia, Canada, China, Japan, Singapore and the US as a visiting professor and has frequently been interviewed by media. And you'll see a lot of his comments around CBDC issues and other issues in the press. So Heng's topic today, as we say on the slide, is China's approach to central bank digital currency, and I welcome Heng. Thanks, Heng.
Yeah. Thank you, Deborah. It's been great to share the discussion about China's approach to central bank digital currency. Next slide, please. What would like to, at the very beginning, is to introduce what is CBDC generally. I think that's the previous speaker has been done a fantastic job introducing the CBDC. In the China's context, the CBDC is about, it's called Yi-Xian Yuan or digital yuan. Essentially, it's being a digital fiat currency. The CBDC, I would say, that's been quite different from traditional currency in the sense that, it involves data. Because if you think about cash, you don't really have track of the use of the cash as much as you do as CBDC. And that involves digital identity and of course technology and regulation, as well as those issues regarding the data flow across the border if they're used internationally. The two questions I would like to discuss: one, what is China's approach to CBDC? Two, what are the influencing factors, or how do we understand China's approach to CBDC? Next slide, please. And also, I have a recent paper on a related issue about broadly CBDC network and the future of global financial crime system. So you may have access to that at a link. Then let's look at China's pathway or approach to CBDC. I would say that China's approach to CBDC are both common and also are different from other countries. In terms of similarities, we're able to see that they're all top-down approach. So it's been the central bank-led one. And also we'll see that the central bank's role will be strengthened in areas like monetary policy. And they're able to have better sense of what's happening in terms of currency flow. And they also have some common arguments in terms of underlying of the why we'll have those kind of the incentive, like financial inclusion, as mentioned earlier. And there are some similarities in terms of encouraging innovation in payment. So these are the similarities. Next slide, please. And then let's look at what are the differences. I would see that one of the major differences, if we compare what we have seen, Chris has mentioned that in Australia, it's more about wholesale CBDC. While the major difference between Chinese one and a foreign one, one of the major differences, Chinese one is a retail and CBDC, public available to individuals, users, and it's kind of account-based one. So which means that actually it's a kind of the cash-like liability of the central bank, and so we see that actually the users, they may link the CBDC with their bank accounts. They're largely connected with the commercial bank accounts, but of course they also have some design which enables that the digital wallet of Chinese RMB, eRMB, you don't need to open a bank account for you to have a digital wallet. So I would say that actually it's a kind of combination of account-based CBDC, which means you need a commercial bank account, but also a tokenized CBDC in the sense that you don't necessarily need a bank account. So it's kind of the hybrid one. They rely on both accounts, but also try to ensure that they can also operate without opening a bank account. And another aspect is that it focuses on the electronic payment. You can see from the name, digital currency, electronic payment, and they currently focus on the retail sale transactions. And there are two-tier or hybrid structure. So the first tier or first layer is the central bank will issuing and the CBDC, and the second layer, the actors like commercial banks, they were redistributing central bank digital currency to individuals. They also involves not only commercial banks, but also like payment service suppliers, as well as the telecommunication operators, like the major telecom companies in China. And another aspect you can understand China's approach is that they have exchange and circulation. Exchange will be conducted by commercial banks, regarding exchange or redeem the bank deposit for the China CBDC. That's like what happening for the paper currency. Commercial bank will take care of that. And in terms of circulation, it is go beyond the commercial banks. So you could have the payment service suppliers, telecommunication operators involved in that regard. And another aspect we see that's for China CBDC, which are now undergoing the pilots in 4 cities in China, is being the controllable anonymity. So which means that at the back end, the central bank will be able to see what's happening. Where is the money is being spent by who. At the front end, it may not be seen by the third party, but the central bank will have the able to see what's happening. And more broadly, I think that's China's approach may be different in terms of China as a leader in fintech, and also China's being a state-led economy. So the government or the regulator play a very strong role in that regard. Next slide, please. And then the next question I would like to discuss is about what are the influencing factors? How do we understand the China's approach? I would say that maybe it's kind of way of the selective reshaping or selective shaping of the currency or the monetary order. I have a paper where if you scan the QR code, you can download that. So in the past, as mentioned, proposed by Professor Porter, that China in the past, in the accession to the WTO, is kind of downloading, external norms. In terms of CBDC, it looks like China's being, the first major economy to trial the CBDC and like to issue that. And so it's kind of where China incrementally uploading their practices to an extra-regional level. I think they are similar to previous practice of China in accessing the WTO, which we can look as a benchmark in understanding China's approach. In the past, China is a selective adaptation, downloading, but now China is being a selective reshaping. There are some similar factors influencing China's practice. but their meaning will be different from what happened in the past. The first, factor is a perception and conception. And second one is complementarity. Third one is legitimacy. Let's look at the first one. When China developed the CBDC, it's very important that they will perceive what has happened in the practice of the fintech, including what happened in the Libra. Those are the global stablecoin. Their discussion, and also in terms of the regulation in the digital currency, that will affect China's design of CBDC because they are not start from scratch. But more importantly, it involves also the conception. So how China develop new plans, ideas, and initiatives regarding the retail CBDC, because that go beyond payment instruments and involve broader issues like data, like digital identity, like the issue about how do you make the offline payment, how do you design the technological designs and standards, as well as the issue like the privacy. And next slide, please. If we look at another factor, is about complementarity. The second aspect of that is how the new practice and institution China is promoting will fit with China's being actually the preferences. China's preference, I think, at least includes an enhanced role in international governance. China's being a trading power, but not a monetary power. So that CBDC may help China to increase the role, particularly in terms of first mover advantage in the digital currency era, in setting the agenda and also to influence the standards, technological standards in this area. And also, they are also involved about trade as well as investment finance that helps China to promote, for example, RMB internationalization, and also using RMB in terms of the trade, because that's also useful for the getting the data related to international economic transactions and reduce reliance on the US dollar in those kind of international transactions. And thirdly, I think the preference will include the response to dynamics like has been imposed by Libra, because China has basically prohibited private digital currency. A third aspect is about legitimacy. So China's being designed the CBDC, indicating that they are good for China's CBDC in terms of the actually domestic legitimacy, financial stability, efficiency, and so on and so forth. But I will see that actually, you take one example, is financial inclusion, and the issue is that actually they also have challenges. For example, for CBDC, it's good to serve unbanked population, but CBDC still requires you to have a cell phone, and maybe a relatively advanced one. There are some reports about that. So it turns to be that how do you serve the people who are lack of capacity to get the cell phones, or elderly people? So there are also challenges in that regard. For international legitimacy, that also involves the issue if the CBDC is used internationally, it'd be crucial to be secure legality and acceptance as a global means of exchange. So that depends on how other countries and users accept this CBDC. And so that's being involves a lot of efforts, to enhance transparency, ensure that the confidence in the data, and also privacy protection, consumer protection, and so on and so forth. And we will see that it won't be an easy job, because there are potential tension, for example, between security as well as efficiency, because you want, high efficiency, or if you need more high security, that may slow down your process. That may work against efficiency. Again, for privacy as well as the compliance, they may also have the tension. And final factor is about institutional capacity. So that involves the capacity of central banks, involves the regulators of the intermediaries, like commercial banks, telecommunication operators, and also involves the capacity of intermediaries. It actually involves both hardware, infrastructure, but also about the software, like the regulatory capacity. And there are many issues that are relatively new, like consumer protection. How do you deal with, the possible risk of loss, the mistaken transfer, the fraud risk? How do you deal with digital identity? If the CBDC will be used internationally, how do you manage the data flow, and the sharing? And also, our next slide, please. So the final slide has been. I also have some recent work relating to the broader context on CBDC, which you can scan according to the QR code. I would say that to summarize, China's CBDC approach is a moving target. So for example, at the early stage, they seem to be more cautious about smart contracts, but more recently, they seem to be more open to the smart contracts available to the CBDC, because they are kind of learning and doing practice. And it looks like that they are trying to pursue a flexibility in this process. And secondly, the practice is more about domestic retail transactions. It remains to be seen whether they'll be used in international context. So for example, there are reports that China is discussing with Singapore about possible use of CBDC in Singapore. And also, we'll see whether it will be used along the BRI. There are some reports that China also promoting the technology standards along the Belt and Road Initiative regarding CBDC standards, according to China Daily's report. And I think there are more broader contexts that deserve attention, like COVID outbreak, they speed up the CBDC development, but also I think that's also the potential competition among different currencies. Because I think no central bank won't be lag behind in the digital era, and also the competition also with private digital currency like Libra, and also that depends on the technology advancement, because if technology develops very fast, maybe the first sort of move advantage may be affected. So I think that's what I would like to talk at this stage. I would like to finish here, and thank you.
Well, thank you very much, Heng, for that comprehensive discussion of a whole range of important issues which are emerging from the development of CBDC in China and will impact on various trade issues and other issues worldwide. Look, I would now like to call on Professor Wei Shen of the Koguan Law School at Shanghai Jiaotong University. This is in the absence of Mr. Charles Dossie, who we haven't been able to get online, unfortunately, but he has recorded us a session which we will play after Mr. Wei Shen talks about the first two speakers. So what we'll do is we will have commentary on the first two speakers. We will then have the video, which has been sent through, and at the end of that we will have questions from our listeners. So I would now like to call on Professor Wei Shen. He is Koguan Distinguished Professor of Law at Shanghai Jiaotong University Law School, and prior to teaching at the law school, he practiced in major US and UK firms in Shanghai, Chicago and Hong Kong for a decade, primarily assisting multinational clients in their China-related transactions, such as foreign investment, private equity, mergers and acquisitions, project finance and commercial arbitration. He is now teaching international investment law, international financial regulation, company law, international economic law and contract law at Shanghai Jiaotong Law School. His current research interests include international investment law, corporate governance, financial regulation and international commercial arbitration. So welcome, Professor Wei Shen, and we look forward to hearing from you now.
Thank you, Deborah. Can you hear me? Okay, thank you. Let me turn off my camera to make sure the internet can be more smooth. Thank you, Deborah, giving me this opportunity to make this presentation. I'm working on digital currency with Heng and other colleagues, and I find that the topic is actually quite challenging, and I enjoy the presentations made by the prior speakers. Probably we may raise more questions than we can answer. The first slide. I think the first topic, first issue is to make sure, I want to split my talk into 4 parts. One is the overview of digital currency. Then I move to law and macro economics of money. Then I turn to CBDC and Libra. In the end, I probably discuss international and local impacts of CBDC and Libra. Next. Next slide. Thank you. So we need to understand that the importance of digital currency overall. The financial sector is a platform-based market. So we see financial institutions, including central banks, commercial banks, and others, acting as intermediaries, serving transacting parties to finalize their payments. Then internet platforms are more important in China and in many new economic sectors, such as e-commerce and the sharing economy. And now we have fintech. Probably we include digital currency into fintech. Digital currency serves a supplementary role to traditional banking. Also, we probably include digital currency into the shadow banking sector. So this may complicate the banking sector as well as the banking regulation. But legal challenge is how to understand the importance of digital currency, especially if the digital currency is a decentralized currency used in the market. Next slide. So we probably can divide the digital currency into 3 categories. Next slide, please. So we have a closed scheme virtual currency, and a unidirectional scheme virtual currency, and a bidirectional scheme virtual currency. Next slide. So we first have next, please. First, we have a cryptocurrency. It's quite challenging because its value is unstable. Bitcoins are issued through the use of computer processing power, which has a technical impact on currency and banking regulation. And the cryptocurrency also are designed in a decentralized manner in order to this probably will raise the question of double spending. Next slide. We also have stable coins. Then we can divide stable coins into 2 parts or 2 types. One is issued by the private companies such as Facebook's Libra. The other is issued by the government such as China's CBDC. Next. The difficulty. Next, please. The difficulty is how to understand digital currency, Libra, CBDC from monetary perspective. For example, monetary policy is needed to control interest rate as well as money supply. So if we allow Libra to be issued by private institutions, then the question is whether the Libra will affect monetary policy, or the other way around, whether monetary policy can have a positive impact on the issuance and flow of Libra. Next. That also raises the question of liquidity and financial stability, because if we cannot regulate Libra and other privately issued digital currency, then liquidity probably is a big issue. Liquidity is the link between financial stability, monetary policy, and asset prices. So intersection of monetary policy and financial regulation is to remain the stable value of money and stable monetary regimes. So especially in the economic downturn with easy money policy, monetary policies, then the engagement of digital currency, cryptocurrencies in the financial system will increase the risk undertaken by the banks and other financial institutions. So consideration should be given to the fluctuation of a financial cycle. For example, whether we can have stricter financial regulation or looser regulation to be implemented in different financial cycles. Next, we have the other challenge is to define the legal nature of digital currency. We probably can rely on different theories or different academic norms or doctrines to understand the nature of money. For example, commodity theory of money. If this is the theory to define the legal nature of digital currency, then the question is how to use the monetary policy, right? Next, the other theory is so-called state theory of money. This probably is used to justify money is only issued by the central bank because the state backup is the key of having the money. Then the question is, in countries with a history of high inflation, prices may be quoted in different currencies, as the latter has a more stable value than the local currency. The state cannot always conduct effective monetary policy. Once the issuing entity gains a monopoly, it may abuse the monetary power. Next. The other way of understanding money is the so-called societary theory of money. Is eventually it depends on the people's trust and confidence in the money. So as long as, for example, Libra is recognized by the people for the use for the transaction, it can be treated as money. Next. We probably also look at credit theory of money. For example, Minsky said everyone can create money. The problem is to get it accepted. So eventually that depends on the market, depends on the market players to accept digital currency. Next. So money, if we look at IMF agreement, so currency includes without limitation coins, paper money, bank balances, bank acceptances, government obligations issued with a maturity not exceeding 12 months. That's the idea of money, or the legal definition of money. Money should have three characteristics. For example, money needs to be denominated by reference to a unit of account, generally accepted as a measure of value and media of exchange within the state concerned. The legal framework for the currency include a central bank or monetary authority responsible for the issue of currency. So the problem is that there are many non-state issued currencies that are used as a media of payment. So this is a wider concept of money. We probably include Libra, CBDC, and other formal currencies. All of them are altogether used for the as a media of payment. Next. So in case law, there are also arguments about the nature of money. The conclusion, let's jump into the conclusion. The nature of money is a social convention, common knowledge, and a shared belief by the transacting parties and the public at large. Next. So specific attributes that distinguish money from other goods or properties are negotiability, abstraction, untraceability, finality. all of these are important in legal framework to understand the nature of CBDC as well as Libra. Next. So no matter what Libra will be recognized, what CBDC will be, as Han explained in his talk, there's a necessity in regulating money, Libra, CBDC eventually. That's because the systemic importance of money and payment scheme risks attached to the use of the CBDC, Libra, as well as other currencies. So money is troublesome and is a three-edged weapon. It could be used for profit motives, lending at interest, or gambling finance. Next. So it's hard to regulate money and the money market for various reasons. For example, money exists in various forms. The market always has motivations to invent new money, no matter how restrictive the money market will be. A clear legal definition gives rise to regulatory arbitrage. Next. So, as Han said, CBDC is a very popular topic, not only in China, but also abroad. But the nature of CBDC is not 100% clear at this moment. As the central bank said, PBOC said, described in its reports as well as some officials' statements, basically CBDC is an electronic form of Chinese yuan. So if that's the case, probably we should not overestimate the importance of CBDC in the future. And we need to wait and see how it will be used and spread into the market, and how it will be especially used in the cross-border context. So at this moment, it's quite clear CBDC will be centrally and solely issued by the CBDC. So it's a very different version of electronic payment or electronic currency from Libra. CBDC is solely controlled by the CBOC and is embedded into the regulatory system. So it will be heavily and tightly regulated by the central bank in China. If that's the case, again, this probably will not have a huge impact on the global market. CBDC works like digital cash and only acts as an intermediary. So it probably doesn't affect liquidity in the market, because it's the PBOC will cut a chunk of the M0 and use CBDC instead of physical currency. Next. And Libra's technical foundation is quite different from conventional currencies. So basically, it's based on centralized blockchain run from the servers of Libra Association members. So technically speaking, it will raise some technical concerns, for example, privacy, data protection, so on and so forth. Next. CBDC has the same legal status as the Chinese yuan, the only fiat currency issued by the CBDC. In China, e-payment environment has matured. Payment environment has matured to the point that e-money already rules. So over-reliance on private sector e-payment has resulted in some substantial risks to the entire financial system and the macroeconomy. This probably is the largest concern to the PBOC. That's probably the reason for the PBOC to issue its own CBDC, its own electronic version of currency. I guess this probably is the legitimacy to use CBDC in the Chinese context, because e-payment system is overlarge at a certain point. So this platform economy needs to be regulated. So the PBOC creates a competitor to marginalize or to squeeze out some portion of the market out of the private payment system. Next. So compared to CBDC, Libra is quite different. Libra is a privately issued currency, so it can be also viewed as an e-commerce commodity. So private currency met its temporary decline in the US. Looking at the development of US banking law and monetary policy, fundamental questions arise regarding what a functional and effective cryptocurrency regulatory environment might look like. So we don't know that part yet, although the White House once said it will not allow Libra to be issued and used in the official payment system. So it's still quite unclear to me or others what will Libra be the case in the payment system and circulation system in the future. Current US law doesn't offer direct answers to the fundamental questions about private digital currency. For example, should the federal government restrict particularly a particular private currency? Should the federal government limit private currency issuance to tightly regulatory institutions so that the government can incentivize or mandate certain desirable features? Next. So if Libra is treated as a commodity, then the question is how to regulate. This, right? Libra is used as a currency in some context. So that's a contradiction we have to face. Next. So conclusion is how a digital currency is classified will depend partly on the functional use of digital currency and partly on the priorities of various lawmakers and regulatory agencies that have the authority to regulate it. So essentially, Libra's legal characterization will have different regulatory implications. It definitely will be different from Chinese CBDC in the future. Next. So, for example, cross-border effects. I guess Libra will be used in a cross-border context, but CBDC in the beginning, at least in the beginning, will be only used in the Chinese context. Then probably we should not overestimate the importance of CBDC in the cross-border context. For example, it will change the landscape for renminbi internationalization. It will change the landscape of the SWIFT payment system. Probably not. Next. The other thing is impact on interest rates. If what PBOC says is correct, then CBDC will be used only as an electronic version of renminbi. If that's the case, probably it won't have any impact on the interest payment or interest rate because the PBOC will just regulate CBDC as well, same as physical currency. Next. Libra's challenge on separation of banking and commerce. This probably is a real issue. Again, that depends on how we define Libra, either as a currency or as a commodity. Then the way of regulating it can be quite different. Next. So problem is we have some problems here. At least in my view. One is a problem related to speculative price. That the measure is how to stabilize currency value. Next, the second problem is monetary policy implementation. So we need to rethink the role of a cryptocurrency platform. So I probably raise more questions than I can answer. I look forward to discussion and audience questions. Thank you.
Thank you. Thank you very much, Professor Shen, for your excellent presentation. So we will now move to the video, which has been sent through by Charles Dorsey, who's the Director of Strategic Initiatives at Consensus Hong Kong. He is the Asian Managing Director of Consensus, a leading blockchain engineering company. Among his many responsibilities, he leads its projects on central bank digital currency with Hong Kong Monetary Authority and the Bank of Thailand. Prior to this, Charles served as head of fintech with the Hong Kong government, Invest Hong Kong, and in that capacity helped found and scale Hong Kong FinTech Week. In 2021, he published Block Kong, a book about blockchain leaders shaping the Hong Kong blockchain ecosystem, and he's obviously an extremely eminent worker in this area, and we look forward to listening to his video now.
A very good morning from Hong Kong. Thank you so much for having me this afternoon in Australia. My name is Charles Dorsey. I'm the Director for Asia Pacific at Consensus. And what I'd like to highlight to you today is our views and experience on CBDCs and the upcoming decentralized finance. 2021 is obviously a year of change. A lot of momentum is happening in this market, and Australia is at the forefront of this evolution. And I will present to you during these next minutes how we see things moving on our side. So Consensus is one of the world's largest blockchain engineering company. We focus on protocol, infrastructure, as well as application layer. So we really cover the full stack. Today we've got more than 1 million users of our wallets. We help more than 80,000 developers and applications to run on Ethereum, and our software suite is very much in traction. We were founded in 2015 by Joseph Lubin, the Ethereum founder. The company is busy with protocol, developer tools, DeFi enablement and payment, as well as asset management and capital market activities. We acquired a few months ago JP Morgan Quorum, which essentially is the operating system for this leading bank for all their blockchain activities, and we keep developing the software. Consensus has been very much involved in CBDCs over the past years. I started for us in 2018 with engagement with the MAS in Singapore, as well as the South African Reserve Bank. Today, we are very actively building a cross-border CBDC platform together with the HKMA and the Bank of Thailand. For the Thai market specifically, we also delivered a few weeks ago a research and POC on domestic retail CBDC. We're also working with Société Générale, with Banque de France, and of course with the Reserve Bank of Australia. So with the stack, with the experience, it has been really a fantastic journey, and we feel very privileged to have been able to join such journey. So when you look at CBDCs, as it was described before, there is really 3 main types of CBDCs: the wholesale ones, which are essentially connecting the central banks with the banks of their ecosystem. There is also cross-border CBDCs, where you look at cross-border transfers using these blockchain-based currencies, as well as the retail CBDCs. We are working out of a CBDC technology sandbox, which allows essentially central banks and banks to start to put their hands on the process, to start to give feedback, experience, and build, most importantly, the use cases. I think one of the challenges for CBDCs is not only to deliver a blockchain-based currency, but looking at what the technology can bring and what the technology can essentially create in terms of value for the banks. So the use cases which will trigger a migration to this new type of infrastructure are extremely important. From experience, they have to be developed hand in hand between the banks, the commercial banks, the central bank, but also the technologists, such as Consensus, to really understand what the technology can bring, and not trying to replicate only what traditional currencies can do. Interoperability is also a topic of attention. There is multiple initiative in multiple parts of the world, and probably in the coming months and years, this connectivity of different platforms and networks will be really paramount for the success and the adoption of these CBDCs. Keeping the banks involved in the CBDC architecture is also something we learn over our experiences so far with central banks. As soon as the banks are there is some engagement, there is some really high quality feedback. It's important to not deliver an infrastructure only, but co-design and co-build an infrastructure to really get the adoption from the early days from the banking sector. We are also noticing that there is a growing appetite from central banks into understanding the mainnet of Ethereum, which is essentially a global network, decentralized network, and what it brings is really the reach for commercial counterparts, reach for other subsidiaries of the domestic companies or domestic banks, and this mainnet access is progressing very well. The same way you can usually use cash today, there is also a lot of opportunities for everyone to be adding connectivity and far-reaching connectivity via a global network. Privacy of the transactions and compliance are important, as well as the open source development. Open source is a very complicated topic. Central banks in general don't want to be locked with a vendor. Open source is one option to get more freedom, but it also takes some efforts, which the open source community is not always able to deliver to maintain quality software. We feel there is also quite some peer pressure in this topic. It's a very hot topic, CBDC, so some central banks and banks are running into this topic with a little bit of a catch-up behavior. And that's important to really look and adjust and design a strategy. Takes the time to communicate with the ecosystem and the technologies to really have something meaningful rather than ticking a box, I would say. And lastly, especially when it comes to the domestic and cross-border use cases, the governance of such infrastructure is also important. It's not easy to build shared infrastructure, should be between banks or banks and central banks. And we feel there is a lot of progress being made, but there is also a lot of is potentially a friction point in the development of CBDCs. The technology is being validated, it's definitely there, but the implementation involves some governance conversations, which can be complicated, and sometimes where the help of professionals and consultants in defining this governance is very critical for the success of the platform. I'll go very quickly to speak to you about decentralized finance, or DeFi, and essentially what we start seeing in our ecosystem, and the CBDCs will at some point grab some of these components or grab some of this new type of infrastructure, is the rise of decentralized finance. So if you look at the stack of finance today, from the money emission to commercial banking, exchange, brokerage, insurance, and payment, we have some existing players in the centralized finance world. And what we see in decentralized finance is extremely experimental, is definitely not ready yet for mainstream adoption, but there is some very interesting technologies as well as very interesting model of operations which are being developed. And we can tell you first that commercial banks and central banks are looking, studying, researching this ecosystem to understand what can be interesting to eventually port into the modern finance infrastructure. So you will find in the world of payment some equivalent in blockchain-based assets. Same here for the core banking activities with Maker. Same for the lending and underwriting with gigantic and global companies. I think today to consider also the rise of new type of blockchain-based infrastructure. Same for the wealth management as well as the exchanges. So a lot of things are happening in the space. The space is definitely, I would say, supported by the engineers in should they be technologists or financial engineers, but also the regulators adopting the technology with different purposes. But all of this will definitely emerge. Thank you so much for having me again, and I look forward to the rest of the conversation. Thank you.
Thank you very much for your very interesting presentation, and you're in the thick of all of this in terms of in a commercial sense. So we're very grateful that you've been able to take the time to prepare that video for us in the absence of your ability to connect to us. Now it's question time, and I am just waiting for the questions in the live event Q&A, if we could have them, please. And I think I have them now, and there are quite a lot of them. And one of the interesting questions which we have for the panel is one where the participant says, I'm very worried about money laundering and black markets. Is there any promise that this digital resources will change the way digital crime has affected the world and becomes more aggressive daily? Which of the panel members would like to answer that question? What will digital currency, central bank digital currency or private digital currency, will that affect the difficulties which are currently felt within economies from money laundering? So, I mean, I guess the issue from my point of view is most electronic transactions these days through banks are not anonymous. But that may not make all people happy. And of course, there is the capacity to use cash now. If cash disappeared, there may be no prospect of anonymity. Then we have to consider whether or not that's an important thing. And I guess that will depend on your perspectives. But Heng or Wei, do you have any comments on that?
I think it's been a great question, and also it's, as mentioned by Chris, it's been hard to balance between anonymity as well as compliance requirements for KYC and also anti-finance for terrorism. So they probably need to have a careful line to be drawn, to balance these two considerations, and they are like to vary according to their jurisdictions. I think maybe a kind of the guideline or regional consensus, on the minimum requirements, regarding privacy protection, and also regarding the compliance requirements may be useful in that regard, because otherwise it will affect the confidence in the CBDC. People may be concerned of using the CBDC because for the cash, you don't really have those CBDC does not have the same anonymity with the cash. If it's not properly addressed, they will affect the use of CBDC, particularly the retail one. Thank you.
Thank you very much. Okay, we've got a few interesting questions down here. I guess one of the questions we've got there is when we talk about financial inclusion in the context of CBDC, why is it that current electronic money formats can't bridge the financial inclusion requirement, but CBDC can? So someone might like to give a short answer on that. Would you like to do that, Heng? Would Wei like to do that? Perhaps Heng is the most appropriate person.
I think right. Financial inclusion, they may also be reached by private, digital currency or present in electronic money. So I think that's I think it's good way that's also to use current electronic money to to promote financial inclusion requirements. For CBDC, I would see that maybe they also have other function. Financial inclusion is only part of that, and also, as I mentioned earlier, financial inclusion may also face difficulty in CBDC. If the CBDC requires relatively advanced smartphone, they may not necessarily totally address the financial inclusion issue because people may not be able to afford that. So I would see that maybe we're better to have more, digital currencies which are able to, have maybe a little bit more even redundancy to address financial inclusion issue. But another side, the CBDC also involve other consideration like monitoring of money going, and also potential competition in the digital fiat currency. So these are the broader picture that may driven central banks to move forward because they don't want to be lost in the competition in terms of the payment. Thank you.
Okay, I've got yes, Wei, please.
Add a couple points. Actually, I'm not very sure if CBDC can improve financial inclusion or not. As a matter of fact, electronic payment system in China itself is supposed to be more helpful to the financial inclusion because the current electronic payment system is privately owned, and they contribute to financial inclusion. But the central bank PBOC says the CBDC will be more helpful because of its convenience, its low transaction cost, and its safety. That's the reasons quoted by the PBOC. But we will see whether that will really happen. Thank you.
Okay, thank you, Wei. I guess this is a question for all panel members, and it may be that this is the last one that we will have in this session because we are running out of time. Wei, how will CBDC best engage with the existing commercial and regulatory issues?
Well, if I'm talking about Chinese CBDC, because the Chinese CBDC basically will be issued by the PBOC, the central bank. So I guess it will be regulated same as physical currency renminbi in Chinese context. So that's my understanding. Yeah.
Okay, and Heng, what about more generally? Do you have any comments on that question more generally? How will CBDC best engage with the existing commercial and regulatory issues?
I think it's being the CBDC need to address the new issues arising from that. So, for example, I think you have new issue about data, which it does not exist for for many of the cash use, but also the digital identity. So it'll be good actually to rely on or adapt the current commercial as well as regulatory arrangement as much as you can. But also we will see that it won't be easy because that they also needs a lot of the attention to the changes, for example, to commercial model. So for example, the commercial banks may face defunding because actually people may move from their deposits to the CBDC. So that's one possibility where the commercial banks may face higher cost for funding. And also, secondly, I think they also need to pay attention to the different standard setting because they like to have a different divergent regulatory requirements by different countries regarding CBDC. So that's another issue. Third, I think that they need to also pay attention to the security, because cybersecurity is crucial, which doesn't happen for for the physical currency, and also that relates to the issue more generally about the compliance cost. How do you manage the compliance cost because you are subject to different requirements? I would say that actually we're likely to face a currency competition. So businesses or regulators all would like to see a more dynamics of international monetary system, and they may also have a parallel system may arise down the track. Thank you.
Okay, thank you very much. Well, look, we're really out of time and we could go on for quite some time answering questions, but unfortunately we need to stop now. I'd really like to thank all of our presenters, Heng and Wei and Charles, for their very interesting contributions to the panel this afternoon. And I would also like to remind participants that if you are joining the next panel, which will have more high profile and interesting speakers and more interesting questions, further interesting questions, you need to, it will start in approximately 30 minutes. So thank you to all our speakers, thank you to our technical people, and thank you to all of you participants, particularly for your interesting questions. We hope you found this useful, and if you have any comments, you can contact CIBEL. So thank you very much, everyone. Goodbye.